Welcome back to the FlipNerd.com REI Classroom, where experts from across the real estate investing industry teach you quick lessons to take your business to the next level. And now, let's meet today's expert host.
Hello and welcome to the REI Classroom. My name is Clay Malcolm with New Direction IRA, and today we're going to be talking about a comparison between 401k plans and IRAs. A lot of people think that they're the exact same account type, but they're actually not. So we'll be talking about that today.
If you're an active real estate investor already doing deals and looking to double or triple your business, you should consider joining the Investor Fuel Real Estate Investor Mastermind. We're a small group of investors that share our best practices, tips, and tricks with one another in an effort to all win. We limit our membership to only 1 to 2 members per market, so everyone shares their knowledge, tips, and tricks openly and honestly. Our members include some buying 1 to 2 houses a month, up to some of the most respected investors and leaders in the real estate investing industry, some of which have personally done over 1,000 deals. If you'd like to be considered for our invitation-only world-class mastermind, please visit investorfuel.com to request your personal invitation. Our next meeting is coming up quickly. Go to investorfuel.com now to learn more.
When considering the difference between a 401k and an IRA, I think it's an easy way to conceptualize to think of a 401k as more customizable and a little bit more complex to run, whereas an IRA is a little bit more of a standardized version of a 401k. And I'll explain what I mean by that. But first, I want to just mention that either one of these account types can invest in alternative assets such as real estate. In the case of a 401k plan, the plan document has to allow for alternative assets. And in the case of IRAs, it has to be the IRA provider that knows how to do the administration and bookkeeping for those alternative assets. So either way, you have to choose a provider or choose the setup that works, but the account types themselves can both invest in real estate and other alternative assets. And there are some similarities in terms of this is why people conceptualize them as the same plan. First of all, they're tax advantage plans for your retirement. Distribution rules are very similar. Disqualified persons and prohibited transaction rules are similar. And so there's a really easy way to kind of lump them into the same bin. However, they are kind of different. And IRAs, of course, and have some employer type plans. So traditional and Roth, of course, are individual accounts, right? The individual is the person who runs them. But an employer is required for both a SEP IRA and a simple IRA, as they are also for a 401k. So these are all employer plans. And as I say, the IRA version of them is a little bit more standardized. So what I mean by that is the rules for how you make contributions and distributions and things like that, those are all standardized. Whereas on a 401k plan, the plan document is really the rule book, and it can change a little bit about both the features of the plan as well as some of the ways that you can participate with it. When I'm talking to real estate investors, one of the reasons why I think 401k plans, and specifically for us at New Direction, we really only handle solo or individual 401k plans. But the things that they are interested in are the special features, which of course IRAs typically don't have. So let me talk about those real quickly. So number one is in your 401k plan, as long as the plan document allows for it, your employee contribution stream to that plan can be in the Roth format. So that's an interesting feature. Second, again, the plan document allows for it, the plan participant can actually take a loan, which becomes, the loan money is their personal money for the time that it's out. Now, the individual has to pay the plan back with interest, so you're actually paying yourself back with interest. But you can take a loan that becomes your personal money for that period of time of up to $50,000 or 50% of the plan assets, whichever is less. If your investment strategy is geared around investing in real estate with debt leverage, 401k plans do not have to consider UBIT that's derived from unrelated debt financed income. So if you have your 401k plan own houses or apartment buildings that are debt leveraged, they would not have to figure in the impact of the UBIT, whereas if have that same investment in an IRA, you do have to think about that. So that's a feature that a lot of people are interested in. 401k plans can be an investor in an S Corp, which IRAs cannot. So there are some features like that that are really a little bit different, and they all are tied into the fact that the plan document allows for those things. The other thing is that's a big one, I think, is that in a 401k plan, the employer who adopts the plan also names the trustee. And of course, in a solo 401k, the employer and the trustee, normally they'll name themselves the trustee, and the participant, they're all one person. And because the trustee of the plan is something that is analogous to the IRA provider, the trustee of the 401k plan is the signer for that plan, whereas the IRA provider is the signer for the IRA plan, right? So if it's the same person, you're the employer, you're the participant, and you're the trustee, you automatically have what's considered commonly as checkbook control. So you're the one signing the documents and that kind of thing. So there is a convenience factor there as well. So when you talk about 401k plans and IRAs, because there's a rollover possibility where there's no tax and no penalty and things like that, and because the tax advantages in a lot of cases are the same as the SEP or simple IRA, I think there's an element of those things all being lumped together. So one of the things that I always encourage somebody to do is think about the exact account type that they're considering and think about it as a tool in conjunction with the type of investing that they want to do, especially if it's real estate and especially if it's debt leverage real estate in this particular case. So each tool is going to have slightly different advantages and disadvantages. You know, if you're the trustee of a 401k plan, you have to make sure that it runs properly. You have to file the tax documents once you get above $250,000 of plan assets. So there are things to think about. In a lot of cases, a 401k plan is a little bit more complex to run. So if you don't want to put in that time, maybe the IRA is the better plan. So it really is one of those things where it's worthwhile to take a minute and think about the tool that you want to use and the one that works best for the type of investing that you want to do. If you have any questions about this, please feel free to visit newdirectionira.com. We have plenty of information about this kind of thing on our website. And I will be back in the RAI classroom later. And thanks a lot for joining us today.
If you're an active real estate investor already doing deals and looking to double or triple your business, you should consider joining the Investor Fuel Real Estate Investor Mastermind. We're a small group of investors that share our best practices, tips, and tricks with one another in an effort to all win. Real estate investing can be a lonely business for successful real estate investors, but it doesn't have to be. Investor Fuel members meet 4 times a year, but we talk to each other 365 days a year, and we focus on improving the profitability of our businesses, improving the quality of our lives. That's why we do this, right? And making an impact on those around us so we can truly leave a legacy. We limit our membership to only 1 to 2 members per market, so everyone shares their knowledge, tips, and tricks openly and honestly. Our members include some buying 1 to 2 houses a month, up to some of the most respected investors and leaders in the real estate investing industry, some of which have personally done over 1,000 deals. If you'd like to be considered for our invitation-only world-class mastermind, please visit investorfuel.com to request your personal invitation. Our next meeting is coming up quickly. Go to investorfuel.com now to learn more. Please note, the views and opinions expressed by the individuals in this program do not necessarily reflect those of flipnerd.com or any of its partners, advertisers, or affiliates. Please consult professionals before making any investment or tax decisions, as real estate investing can be risky. Are you a member yet of flipnerd.com, the hottest real estate investing social community online? If not, you can join for free in less than 30 seconds and get access to hundreds of off-market deals, vendors in your market to help you in your business. And you can start networking with thousands of other investors just like you. Get your free account now at flipnerd.com. Please check out the Flipnerd family of real estate investing shows, where you can access hundreds of expert interviews, quick tips, and lessons from leaders across the real estate investing industry. They're available at flipnerd.com/shows, or simply search for Flipnerd in the iTunes store.